If you are someone who is spending through credit card, then spending through your ATM card or savings account, or if you are someone who is very casual in spending his tax refunds or bonus amount than spending from his salary, then this video is going to give you insights regarding a concept called mental accounting. And I am also going to tell you how you are going to use these insights to grow and develop your business as a mutual fund distributor so that you are always on top of the game. Hello everyone, I'm Shobit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So first, let me give you a simple definition of mental accounting so that you are getting clarity what we are getting into. So when we talk about mental accounting, we means that we are going to be behaving differently to the same amount of money depending upon from where it is coming from or where we are going to spend. This means what? We need to understand that if we are going to be taking decisions regarding any money matters, it will depend upon our own behavior than the actual expense or income we are going to be making. So as I told you, if you are spending through a hard cash than using any electronic mode, you are going to feel the difference. If you are spending money through cash, it is directly showing that you are depleting your resources and it is going to be much more painful for you, if I may say, than using credit card or other electronic medium, because that is a passive way to invest to spend. Other way to look into it is if you are spending from your salary, whatever you have received, compared to any unexpected cash flow which you have got, then there also you are going to feel the difference. The kind of attention, the kind of pain which you are going to go through when you are spending your money which you have earned while working for those 30 days through your salary, then any bonuses or any unexpected gift money you got, both these parameter or both these instances, the kind of effort or the kind of psychological roller coaster which you are going to go through would be very different. So what we need to understand is whenever we are taking money, whenever we are taking decision on any money matters, the decision is not only depending upon the quantum, but it is more to depend upon the way we are going to be perceiving the expenses or the income which has been generated. So those insights we are going to be using to help our client in making better money decisions and helping them in making better financial life for themselves. The other important concept which the mental accounting discusses is how and why we are bucketing our money into different buckets. So most of the time, if you see in the market, people are educating us that we need to bucket our incomes into, say, needs, wants, then for wealth building process and so on and so forth. Now, we need to understand that if we are going to be bucketing our money into different cells, let's assume that people are saying that we need to put 10% for our wealth creation or investment, 30% for our household expenses, 30% for other regions, and so on and so forth. If fungibility is not there, that is the technical term which mental accounting people are using, then most of the time what happens, we end up making irrational decisions in the money matters. Just to give you an insight, most of the time we are going to be putting sufficient money into our savings bank account, even though we are having a very large credit card outstanding. But what we need to understand is both these instances, money is ours, and one place we are paying a very high interest rate and other way we are not getting enough returns on them, if I may say, and ultimately both assets and liability are of our own. So these insights we need to be very, very clear on. That first, what we need to understand, that whenever we or our clients are making money decisions or any financial decisions regarding money, the behavior for them would be very, very different. Now, if this is the insight which you need to take it forward, let's understand what is the impact of mental accounting is our clients and our lives. So the first thing is, most of the time we are going to take lot of irrational decisions, as I may say, regarding cash flows. So if you need to understand that if you are not going to be taking rational decisions, your cash flow is going to be impacted. Just to give you insight, most of the time, if you are not tracking your cash flows, then the expenditure for you would be much, much higher than what is your income. So what we would like you guys to understand and make your client aware, how much is their active income, how much is their regular expenses, so that they can take an active call. I would highly recommend that we as a mutual fund distributor, we need to educate our client that they need to track their cash flow on a regular basis or month-on-month basis, so that they can take an informed decision. Then spending habits. Now, as I told you, most of the time what we need to make them understand, that they are not differentiating between their needs and wants. Most of the time they are spending on their wants and not understanding that if they keep spending on their wants, their future needs will be impacted. So you need to make them understand that they need to start segregating their expenses and then take a informed decision. Okay, then the quantum of spending, which most of the time our clients are going to make. Now, whenever they get, let's assume, amount of money as a bonus, which is not very substantial, they are going to spill it over. But if they get huge amount, they are going to take much more informed decision in their investments or expenditure behavior. What we need to make them understand is, money is money. If they are able to make rational decisions as all point of time, they will be much better in their future financial behavior or in their wealth creation journey. So once you are able to understand the insights and how you need to take it forward to your client, let me tell you, you as a mutual fund distributor, how you will be able to benefit from this when you are giving insights to your client. The first thing which you can help your client is this: you need to make them understand that if they are not able to make rational decisions more often than not without taking in a professional help, they are going to make wrong decisions in their investment journey. Just to give you an example, whenever any of us is going to invest in, say, two mutual fund schemes, for example, and one mutual fund scheme is going to do very well and another mutual fund scheme is not going to do that well, the more often than not, people or investors are going to withdraw investments whenever they need from those investment vehicles which are doing well than from those investments or schemes which are not doing well. But the rational decision should be to take out those schemes or investments which has been not performing well, because it is not going to be helping. But what happens, because of our mental accounting, we think it is going to cause a lot of pains to them. It is going to hurt their ego because they have taken a wrong decision, and that's why they want to stay in those investments to prove that that is a right decision. And that's where you are going to pitch in to help your client understand that the good way or best way to take their financial decision is to take out the bad apple from the good apples, which are going to be rewarding much better to them in future. Then you need to be also making them understand that the end use of money is very, very important. Now, most of the time what happens, that people are going to be bucketing in a different bucket. This is for saving, this is for investment, this is for expenses, this is for party, and so on and so forth. And they are not using one money for another. Now, in that case, what happens, if in any bucket, if it is going to be emptied, more often than not, they are going to borrow money, and that going to be a much costlier affair for them. And you need to make them understand that they should not compartmentalize every expenses, and they need, or every bucket, and they need to be fungible, which is going to be a much better way to make decisions regarding money. The third point which I want you guys to emphasize and use as a tool is you need to understand, as we have discussed, is spending those money which they have earned by putting lot of effort, then spending money which they have got once in a blue moon is going to be a much difficult task. So if you are going to ask from their investment which they are earning through their salary, it would be a little tougher task to execute. But whenever they are going to receive any bonus or incentives or gifts from for which they have not worked hard, that money would be much easier to spend or invest. So I want you guys to be active whenever your clients are going to receive any bonus, incentives, or any unplanned, if I may say, income. You need to be first one to guide them to take an investment decisions in respect of the take an investment decisions and not expenditure decisions, because those money taking a call would be much easier. So I want you guys to be active on and make them understand that this money would be better used for the future purpose and not on investments. The last point which I want you guys to understand and make your client aware, that you need to understand, as we have discussed, behavioral accounting is all about making a decision regarding money based upon emotional triggers. It's not so. So whenever they are doing their investments, more often than not, they are not putting enough effort for that, or it is a passive, as the name is. So they don't feel the excitement or happiness once those investments start yielding the results, because they are not directly working on them to generate return. But we as a mutual fund distributor, we need to make sure that every now and then we are going to be making them aware that their investments are yielding what results. So I want you guys to always have a review meeting on a periodic basis and make them aware on the quantum of returns which the investment has generated. So if the investment has generated in a quarter, say 50,000 profit, you need to make them aware if it is 1 lakh or 5 lakhs or 10 lakhs, whatever return over a year or a quarter which the investment has generated. If you are able to put across that number, that is going to stay for a long time with client, and they are going to remember that, because that is the income which may be equal or more than the active income which they are generating, and that can be a good motivation for them. So I want you guys to use this mental accounting insights. It is a very beautiful concept where people are going to be taking irrational or uninformed decision, which most of us might have faced in our life. So if you are going to use this kind of insights and trying to use these tools to grow your business and help your client in their financial life, it is going to be much productive way to grow your business. In case you like the content and it was useful for you, I would love you guys to subscribe our channel, hit the thumbs up button, so that whenever in future we have something new to offer, you guys will be first one to know. Thanks for watching. I'm going to see you next time.